Welcome to this very special edition of the KAJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through the industry insights, information, or simply learning from them. And today we have Ryan Hemingway. He's the managing director of Epic Ventures.
Good morning. How are you?
And we'll be talking to Fintech. Welcome to the show, Ryan.
Thank you very much. Thanks for having me.
Thank you. Welcome to the show. Welcome to India. So we'll be talking about fintech. But first, to start with my first question to you, Ryan, is you started as a flight instructor, and you were set to become a commercial pilot, and then now you are giving wings to others, other entrepreneurs' dreams. What better than that? And you are doing it in a big way through Epic Ventures. That's the way I can put it. But from your point of view, if you can help us understand what exactly Epic Venture does, what you do, what you invest in, how do you invest in?
No, great question. Great question. So Epic Ventures, we're an early stage venture capital fund. And for those that aren't aware, that means we go out and raise capital from other people. It could be individuals, could be institutions, could be, state pension funds, etc. We raise that capital. And so Epic Ventures, we just closed our sixth fund, and there's about $170 million there. And then we take that capital and invest it into entrepreneurs that have, ideas that are changing the world or changing a market or whatever opportunities they find, that we get behind them. And as you said, hopefully give them wings to help them accomplish kind of their dreams and their goals, and again, make everything more efficient and make people happier at the end of the day.
At the end of the day.
And so that's Epic at a high level. That's kind of what we do. And I said, I've been there with them for 12 or so years. Again, we've been through, we're on fund 6 now. So we've done a lot of investments, and it's all software focused. So it's all enterprise software related, and then various industries from there.
Right. Software focus. So right now, as we are talking about the future of fintech, and in a larger way about technology itself. So at this moment when we are talking, Ryan, how do you see things shaping up for tech firms, for your investment, and as well as, largely in terms of fintech? How exactly would you put it is the time today in terms of all stakeholders who are involved in tech as well as fintech?
Yeah. So as you know, right now, anyone that's watching the markets, right, there's a lot of turmoil in technology, particularly technology stocks. I mean, everything, to be fair, tech got a little bit ahead of itself, but I think we're going to see a correction here a little bit. And then we're back to growing. I mean, the reality, in my opinion, is, software is everything, is everywhere, right? It's automating processes. It's creating better user experiences. It's cutting time to get tasks done down dramatically. So again, that's not even mentioning all the entertainment side, from the gaming side to the media side, etc. That there's entertainment there as well. So as a whole, software's here, technology's here to stay. Again, it's going through a brief little, maybe correction, call it, but then again, we're going to be back to off to the races again. Regarding fintech specifically, right? Fintech, I know there's been a lot of discussion. There's a lot of dollars right now, venture capital dollars, that so the amount of capital that's gone into fintech is slowing down over the last 12 months. So there's a lot of talk about, hey, what's the future of fintech? So I would say, yes, I've seen that number. So at a high level, that decrease in dollars going into venture capital is true. But what I'm hearing from the banking side, and again, I spend a lot of time with retail banks here in the US, a number of those. Again, I've got a lot of networks there, the investment banks. What I'm hearing from the banks is that there is still a heavy focus on adoption of technology. What can we do to improve our customer experience? What can we improve? What can we do to improve our customers, not only, what they're doing with our products, improving their lives. So that is very much a talk, again, in my experience at the board level for a number of the banks that at least that I'm very familiar with, and those that I'm even less familiar with. So I think the future for fintech is very bright. I think you're going to see a lot of adoption going forward.
Right. That's your view. Help us understand this better, Ryan. That let's take tech and fintech. When we are talking of tech, there is a lot of talk about AI. And at this point in time, there were a couple of mentions and stories about it's almost like an AI winter where there will be not much funding happening. How do you look at such a scenario when people are looking at things from that point of view? Will you find this the right time to invest in new firms, early stage firms? How would you look at it? What will make you decide in terms of putting your money, supporting such startups in terms of putting your money in there? Because these are different times, and when they say AI winter, how do you differentiate tech beyond that? Because right now everything is coming down to AI and machine learning. Now let's look at, I'll come to that, the fintech part of it. Now, if you look at the ABCD of fintech, then there is again the AI. The A is the artificial intelligence. The B is the blockchain. You see the blockchain situation right now. And then there is the cloud computing, and the D part is the big data. So how do you look at both these things together as the managing director of Epic Ventures? In the same, people would like to understand and learn from you. How can they invest in a thing like that? Or a lot of firms are trying to be unicorn, who are trying to move into the IPO stage and all. So people would like to understand this whole scenario from you. Several questions at the same time, in terms of tech, fintech, but they're so interrelated, all of them. And I just wanted you to answer them at your own pace, the way you want to answer that. Nobody better than you to answer them. You put your hard-earned money, others' money, into the spaces that you find interesting, that you find them growing. Over to you.
No, it's a great, Chris. A lot of questions there. So let me walk through. I'll try to go through one by one, and if I miss one, please, KJ, please correct me, and I'll address it. So, at a high level, it sounds like your question is, how do you pick, how do you differentiate between all the different technologies? Again, as it relates to, growing a company either to unicorn status or specifically to fintech. And so I would say you are right. There are a lot of cool technologies out there, right? AI, blockchain, cloud. I mean, you've mentioned a lot of them. So when I'm looking at a company, I think it's important to break those down into use case and how much value that technology delivers. Right? Blockchain as itself is a really cool technology. It does a lot of great things, and it can accomplish a lot of great things. So when I'm looking at a particular industry, for example, like fintech or finance, banking, and I'm looking at a company, I have to ask that question to myself of how does this technology, what's the value add to a bank, for example? Is it, where is that value coming from? Is it value in improved process? Is there a speed up of tasks to be done? Is there an automating of tasks? Is there or is it a better user experience? Something along those lines. And then the analysis under that comes with, okay, how much of an increase in ROI may that be for said bank? So for example, I invested in a company CION Digital, which is in, it's a company that's built a platform to enable, call it Main Street businesses, to engage with and accept and work with digital assets, for example. And so the analysis there was very much that, right? You've got, okay, you're using this type of technology. Where's the value add? And I would argue that in all those technologies you mentioned, I'm taking the same approach with AI. In fact, I've been looking at a number of AI companies with the same lens, right? Okay, what specifically is the AI doing? What is that AI accomplishing for said group? And what is the expected value add or return on investment with that particular technology? And so I take that approach very much as a very first, second, and third step of understanding how that applies. Because as you said, there is unbelievable amounts of cool technology. And at the end of the day, to build a great company and a unicorn type company, it's got to deliver a lot of value to a lot of people.
So at this point in time, if you were to look at the companies, will you look at the entrepreneur or will you look at the technology? Because many a times these technologies, they sound all dependent on something new that is happening. In fact, take the example of even these big companies who are laying off people. For them, COVID was the big thing, and this was the big window of opportunity for the future. And only out of this, perhaps Apple is the one who has not cut down on employees, because they had that thing to look into the future, look at it much more rationally. That's how people are looking at it. So how do you as an individual, as a venture fund owner, look at things much more rationally? Can you teach us and not get swayed up by those shining lights and those market exuberance? How does one do that? How do somebody sitting in another corner of the world, like in India, can understand these nitty-gritties from a master like you and do not make a fool of himself as well as the money that he's putting into such companies?
Sure. I think one of the advantages that I do have sitting in this seat, and again, anyone in India that's investing in startups is that when you're investing in a private company, those stocks aren't traded on an exchange, right? You're not watching those share value go up or down by second by second by second. And so you avoid a lot of what I would say, the emotional, maybe irrational, maybe it's not irrational, maybe it is rational sometimes, but you avoid those emotional up and downs of the market. And I think what that allows you to do is get grounded in the fundamentals of the business that you've invested in. And so to jump back to your point about entrepreneurs, is I would say the entrepreneur is absolutely critical to the success of a venture. So there's the entrepreneur, their ability to, build a team around them, to execute, to go to market, but also then there's the technology itself. So I think for anyone that's listening, I guess my advice would be, again, if you're investing in private companies, one, you've got the advantage of getting out of the ups and downs and sways of the emotional market. But two, remember when you've got to stick with those fundamentals, right? Is the business really delivering value? And if it is delivering value, then you should be gaining customers. If you're not gaining customers, spend some time and energy to understand why you're not gaining customers, right? And you can break down each of the steps in that process. You would break down, by the number of steps, right? So each step has a number of sub steps below that, right? So if you say, wow, we've got a really great product, our customers love it, it's delivering a lot of value, but we're not really growing. Well, it may be a customer acquisition problem, and you can spend some time focusing on customer acquisition, right? How are we getting customers? Are we not reaching out to the right people? Are we not getting enough? Are we not getting in front of enough people? If so, maybe there's some steps to take there. But I think that's how you stay grounded, is continually focusing on the right problems, continuing to analyze the fundamentals, and keep digging deeper and deeper. And it's not a one-time thing, by the way, KJ, as you know, it's an ongoing process, right? Every month, every week, there could be something new that you have to focus on and improve.
Right. Now, let's look at the future of these things. Do you think, for example, let's look at fintech. Many a times people talk it about digital lending, then payments. And then there is the blockchain part of it. Their biggest thing is that, listen, we are going to serve the underserved, and especially talking about the lower 20%, 30%. And then it has not happened. The technology is good, but then there is a lot of fraud that happened, and now people are talking less about it. You saw, in terms of then, right now they are talking about technology. When things are good, they talk about the rising prices. You see what you call the Bitcoin price. Every day people keep on talking about the price. When things are bad, or when they have to convince somebody, they will talk about the 20% bottom people, and we'll be helping them come into the system, which banking is not able to do. Even perhaps your fintech system is not able to serve, and let's bring them into the system through Bitcoin. In this contradictory state of affairs, how does a simple person look at investing purely as a venture fund, as well as purely as a customer? How would you ask them to look at these things which are still evolving? Everybody is talking. For example, there is this big thing, EdTech. Everybody was talking about how it will change lives. Obviously it is changing lives, but a lot of companies in EdTech are moving down to offline courses. They know it's a brick and mortar thing that will be there forever. Is it going to be the same even in fintech? Do you see that as the trend? How do you peep into the future and tell us what exactly you see?
Well, I think the future, again, my crystal ball may be a little foggy, but I'll give you my opinion. I think the future of fintech is probably going to be, it won't be all or none. I think what will happen is you're going to see most financial transactions, most banking transactions, I think, are going to take place digitally. There's probably 80-90% that's all going to happen digitally. Like eventually it'll get there. But I would say, like your EdTech example, right? There is going to be a portion that's always going to want, they're going to want somebody to hold their hand. They're going to want somebody to talk to. They're going to want somebody that they can call up if there's a problem and say, hey, take care of this for me, right? But I do think fintech is moving towards more digital, transactions in every way. And for example, you brought up a great example of the underbanked, right? There's been a lot of startups targeting at the underbanked, right? To bring those people into the system, to help them get some of the advantages of accounts and interest and all that stuff. But one of the reasons, if we back up and you could say, one of the reasons that they're not being banked right now properly is because historically banks, again, we've all heard of the 80-20 rule, right? 20 banks make 80% of their money on 20% of the customers. And that's, true to some degree, give or take. And those lower dollar customers have always been an expense to a traditional financial institution. But with the improvements in technology, like some of the things we've talked about, from cloud computing, from AI to et cetera, it's driven the cost down on delivering services, goods and services to those customers. So I do think while the adoption from that group, that underbanked, has been slow, what we're going to see is we're going to continue to see those expenses come down through the benefits of technology. And eventually we'll see more and more of those underbanked become banked. And that will be enabled by technology. There's not another way to do that. So I do think we're going to continue to see adoption. Now, if I'm switching to, again, I may be jumping around, KJ. So if I'm getting off topic, please correct me.
No problem.
But on the so blockchain itself, right? It has changed a lot, and as you know, we've seen a lot of fraud. We've seen a lot of problems in this market, which is unbelievably unfortunate, as we can all agree. But blockchain itself and all these DeFi protocols, right? These decentralized finance protocols has enabled a lot of people to take part in that world and to do well. I think what we've seen with all this fraud is there is a reason for regulation, right? Regulation came about 100 years ago in the U.S. or whenever in the U.S. banking system because of some of those problems, and it's not that blockchain's bad, and it's not that all the players are bad and fraudulent. It's just we've seen a couple of major pieces of fraud. But I think, again, if I'm predicting, I think from discussion I've had is we're going to see regulation step into that blockchain space a little bit, certainly in the US, and try to regulate away some of those risks that have taken place.
Right. Now, let's look at this way. When fintech was supposed to democratize systems from large entrenched organizations, how do you look at it? Has it succeeded? Is there something lacking? Because blockchain, as of now, there are many questions on it. Technology may be good, but then it also talks about certain loopholes. A lot of countries are not confident about it. As of now, India too has a lot of reservations about something called cryptocurrency. We don't have any currency beyond the Indian rupee. There is a term crypto. We all know about it. So our RBI, Reserve Bank of India, or the federal bank, is coming out with its own version of digital currency. We call it digital currency. So fintech bank system has not worked in this way. It has not been able to serve everybody. And then again, there is an entrenchment in terms of some people, some banks holding too much of control. And then blockchain came in. People start saying, okay, this will give you that power, underbanked, the power to bank and all. And then they said you can transfer money from one place to another, where there is no sovereign guarantee, where there is anybody can just move from one place to another and can whether that is legitimate or illegitimate, it has to be seen from that point of view. What is the future in terms of new technology, in terms of banking, in terms of our lives, that you see emerging? Because a lot of startups must be talking to you. Are there technologies which will make our lives easier, or will it keep on exposing ourselves? I know future is digital. Digital is the future. But what about using technology for our betterment, and not technology using it just the way, when you talk of fintech, when you talk of tech, when you talk of banking, you come to chatbots. Everywhere you call, there is a chatbot there to answer you. How do you look at it? How does a person look at the future in terms of, beyond chatbots and beyond chat GPT creating so much of content?
Yeah, I mean, I couldn't agree more. I think you're right. I mean, the future is digital, and I'll take it just a little off topic now. But talking about chatbots, I just met with a company last week or so, and it's kind of the next iteration of the chatbot. But it's you, KJ, could have your own digital AI avatar, and you could feed that with. You basically could give it all the interviews you've done, anything you've written. And it basically speaks and responds like you. I mean, that's anyway. That's a little off topic there, KJ. But you and I could be having this discussion with your AI avatar at some point.
Right. They are creating some podcast, between historical characters by creating something, and it comes out as an interview with as if, if you don't tell them that these are the characters which are no longer alive, people would probably not know about it. And that's, in fact, a lot of things are happening in terms of, asynchronous podcasting, where, you are not bound by timelines, or in terms of, locations and time zones. You can record at different time zones and it will come out as an interview, as if everybody has done the interview together. But in terms of, somebody who is getting into funding, how would they look at the future? That's the only thing that is very important to understand for anybody who wants to be, get into this venture capital stuff. How do they look into the future? How do they actually pick the right companies for investing money?
Yeah. So it's a great question, and it is a challenging one. So again, we talked about specifically the value add, and again, I'm going to quote. I won't quote word for word because I don't remember exactly, but Ev Williams, one of the co-founders of Twitter, he said, again, this is a long time ago, but he said, look, it's important to remember that technology itself is not a utopia. It's not something magical, right? He said technology is an engine. It's a machine, and it enables you to get things done, maybe faster, quicker, whatever. It just is it's an enablement machine. And he said what you find is people want to do what they've always done, but they do look for ways to do it faster, cheaper, better, quicker, easier, etc. And so specifically around fintech, again, as far as, has it really, has blockchain and crypto really disrupted and destroyed the financial system as we know it and democratized everything? Well, obviously that hasn't happened. But I would say fintech in and of itself has made a lot of progress over the last number of years in areas of just delivering products, right? We have seen an increase in the underbanked that have gotten access to product. We have seen a number of platforms that have popped up around, microfinancing, and so I call it microfinancing, if you will, that has enabled borrowers that needed capital to get capital that not at exorbitant interest rates, like some of the payday loan stuff. We've seen a lot target there. And on the other side, we've seen small businesses get access to credit and loans, for that matter, that in a fraction of the time. So again, in addition to that, we've seen a lot of younger people through Robinhood and some of these other betterments. We've seen them put money aside in investments, which we know is, in the long run is likely to increase their financial livelihood. And so I think you can go through each of these categories that are typically what we would consider as financial services, right? From loans to wealth management to payment transfer to, et cetera. And if you took all these areas, I think if we look back and really did a deep analysis of that, I think what we'd see is, yes, fintech has brought improvements to to lots of people in a big way, because those products have delivered value, whether it's a lower cost of, cheaper, faster, more efficient, etc. And so I do believe that we will continue to see that going forward. I do believe that, and that's why I'm spending a lot of time still looking at fintech around all of those areas.
Right. Are you also looking at India, Ryan?
We haven't looked directly at India. I have got, again, the company that I mentioned previously, CION Digital. Snehal, the CEO, has spent some time, and he's working with some groups down there. And I know, again, and we've had, development, our companies have had development teams there as well. So there's a lot of opportunity, I know, in India. You've got a lot of smart, talented engineers and entrepreneurs there, I know for sure.
Right. A lot of people say that initially, I can do with my own money, and I should avoid, venture capital. Why do you say that? Is it because they can come in and make your life very difficult, or or actually how much value do they actually add? Is funding actually needed for everybody? How should a early stage startup look at a person like you who is ready to put in money?
No, that is a fantastic question, by the way, because I think that's the right question that an entrepreneur should be asking. And if you look at the statistics, what you find is venture capital really funds about, I think it's less than 1% of all businesses, right? We're looking for a very specific business, that's got a growth trajectory, that's got scalability, but it's also in a place where they need capital to kind of move to that next level and grow. I would say most entrepreneurs can probably get started with far less than that and build phenomenal companies. And so, again, your question is absolutely dead on. Every entrepreneur should be asking that, because they don't necessarily need $10 million to get going, right? In fact, if you look at the Inc. 500 list, here in the States, right, the majority of those companies on that list get started with less than, I think it's $50,000. So, there's a lot of platforms that have enabled, entrepreneurs to build and grow pretty successful businesses that didn't need venture capital. So to anyone out there, yes, I would say as an entrepreneur, ask yourself, how can I get started? What's the amount of capital I really need to start, selling this product, selling this good, selling this software? And the chances are is you probably don't need $1 million to get started. You need much less than that.
Right. And as a VC, how do you look at things? Is it purely from a point of making more? You can be open about it. Like, is it purely about money, or is it actually, that's why people ask, do VCs actually make a difference at any point in time? So is it only about making money, or is it that there is some degree of satisfaction where one actually looks at and feels happy that, yes, this is something, I have added value to help this company grow because it had a good idea?
I think, again, personally, hey, look, we're all working to make it, make money, right? That's just part of life. But I would say, I think the best VCs and investors are those that find satisfaction in helping someone to grow. I mean, if you don't enjoy, I would say, where I spend a lot of time with entrepreneurs, and again, believe me, the startup world is super fun, but it's full of its own headaches, right? I mean, nothing goes easy. Like
right.
Those projections that are hockey stick and just go up and to the right, occasionally those don't happen. Right. So unless you really enjoy kind of working with entrepreneurs and working through and solving those problems and taking some satisfaction in seeing someone be able to accomplish those goals and their goals, I think this is a tough road, right? I mean, being a VC is a little more like a coach, right? Where you're working with your companies and you're trying to help them be better. You're trying to inspire them to be better. And what can I help you to achieve those goals that you want to achieve? And I think that's the mindset that you kind of have to have to be successful.
Right. I'm just, while you were talking, that it's not easy work for anybody to do. Is it because a lot of people would want to be, in your shoes, in your place? How should they look at it? Is it a good life? Is it a happy life? How do you look at things? Because you have to look into the future. Have to look at the entrepreneurs, whether they have a future themselves, and the idea has a future at all. And then you got to, after some time, the period is quite long. You have to actually have a lot of patience. So somebody who wants to get into your side, what do they need? Any particular sort of a training, their mindset? How does it work? Because you chose this line. You have done your MBA from Oxford, and you are a BS in psychology, MSS in economics. With so much of things, you could have lived a life with lesser headache than you have at the moment, and perhaps a little bit of less money. Who is this? Who is this job for actually? Is there a particular way to look at it?
I would say, yeah, there probably are jobs that have less headaches. But I would, again, for me, again, I'll only speak for me, but I do enjoy working with entrepreneurs, and I do like solving problems and hard problems. And so I think one of the benefits from being in this role is, there's a lot of variety, right? I mean, again, I don't just focus on fintech. That's kind of my main area of expertise, but I do have other areas. So I may, jump, different problems throughout the day. So I like the variety. I like the challenging problems. And I really enjoy working with entrepreneurs, right? I love to see them succeed. And again, I wish the best for everyone that I work with. And that's part of the enjoyment. As far as building up the skills to kind of get into this role, I would say, think about what I do as a VC, right? There's really three things that I do on any given day, right? There's find new deals to invest in. There's working with the portfolio companies that I have invested in, and then we raise capital. So at any given time on any given day, something that I'm doing falls in one of those categories. And again, as you heard me talk about, when you're doing diligence on a company to invest in, you're thinking about that from a perspective of what's the value added to that. What value is that software adding? I would say you can take that same lens and look at, again, yourself as an individual and say, okay, how can I add values in one of those categories? So again, if we go back to those three, right, what skills do I need to add value if I'm looking for new deals, right? What networks do I have? Because that's a lot of deals come through different networks. Do I have a channel? Do I have a network that has deals that I'm connected to interesting opportunities, etc.? So there's a good one. But the second one, working with portfolio companies, and I think this is where a lot of people can improve significantly, is, right, if I'm on the board of one of my companies and they have a problem, do I have some experience to draw on to help solve that, right? How am I going to help them? And you can pick, a company does a lot of things, but you can pick a few areas to be an expert in, right? Well, maybe it's sales and marketing and go-to-market strategy. And then I would say you can spend a lot of time learning, not only online, but you could do it at university, or you can do it by getting involved with companies to say, what are the best practices? What are the kind of things we can do? What will improve, etc. And then raising capital, again, that's the same, you can ask yourself the same thing. How could I add value there? And again, if you kind of do that self-analysis under that lens and say, I've got some value to add there. And by the way, I like, some of the things I've said. I really like challenging problems. I like, the variety. I like working with entrepreneurs, helping them succeed. Like, if that all sounds great, then yeah, I would say this is certainly a career path that's worth pursuing.
Wonderful, wonderful. That's a lot of insights, information, as well as learning, Ryan. My last question to you is that there are only some things, or a lot of things, or many things that money can do, and you deal with money, talk money, and live money for a lot of part of your day. How is it that at the end of the day you detach yourself with all this money talk and be yourself? How do you live your own life, be happy? What is it that you want to achieve after achieving already so much? Is it also again about money?
Yeah, no, I think it's a great question, right? How do you kind of live? And I think there's a number of things that can ground you. So I try, I do like working with entrepreneurs. I like working with others. So I work with a lot of the universities around here. So I go up. In fact, I'm going up tomorrow to talk with the class and present on fintech. Surprisingly, not surprisingly, but I work and I'm on the founders board up at the Entrepreneur Center up here. So I've mentored a lot of students. Again, I try to spend a lot of time giving back. That's not about money at all. It's just about trying to help succeed. Family is obviously important. I try to come home and be, one of the things I've talked to my kids a lot about is, just being where your feet are. So when I'm here, it comes up, right? I'm going to be somewhere and have to take a call and have to get on this, and that's fine. But trying to just consciously when I'm here, be here. When I'm with my kids, be with my kids. When I'm watching my daughter dance, I'm there. I've got my phone in my pocket and I'm engaged, or vice versa. So again, there's not a silver bullet answer, I think, to that, KJ, but I do think it's a great question. And I think what it is, the short answer is, I think consciously it's just an effort of, I'm here, I need to engage, right? I need to engage.
Right. On this note, it's a wrap on this very special edition of the KAJ Masterclass Live. Thank you so much, Ryan.
Thank you very much for having me.